SNTG. This one we've traded a couple times last month. Joseph Mass, what's up? Everything is great, dandy. Market's a little slow today and yesterday so far. Other than that, everything is great. SNTG up about 100%. I mean, it's up 100%, but I don't know if we're gonna get continuation on this. We've traded this a couple times already last month. Could be just a dead cat bounce, and it could just fade. Doesn't have any fresh news on it, at least I don't think. And we're still far off the highs. I'm thinking that a resistance is going to come in at some point. Relative volume is much lower than the first green day so far. Depends on the volume on the open. Oh, okay, I got you. Nice to see you're in the stream today. So yeah, in the streams we just kind of just go through the pre-market watch list. I don't really trade as much pre-market. I rarely trade pre-market anymore. Kind of just flip through the scanner. But SNTG traded. This was popping up last month. From 2 all the way up to 845. Very nice move on this day, but it had fresh news. I think it had fresh news on that day. Today it doesn't have fresh news. We're off the highs, and we have a resistance coming in, probably from any shorts stuck here, any longs stuck here, any shorts want to add their position. We had another day. We had another day back here in May, all the way up to 963. Maybe it'll be a quick break of the high, and then maybe a fade. Yeah, it's a good trade. Small trade from VWAP, and it sold at the resistance before it broke. So I assume you bought here or something, or you bought here. So. Small trade from VWAP, sold at resistance. Oh, so okay, so from here, probably up to there. So that's a pretty decent trade. Yeah, good job with that one. You also had that ascending support coming in as well. I would definitely want to be careful on this one. The market overall has been a little bit weak since late last week, when we've been getting those huge, massive flushes. To the high. $10K seller at 75. Up to 80. Anyone trading this? We can hold this area and we can make continue higher. Man, I don't know. The market hasn't been the same yet this week. We haven't had those really big runners yet with high volume. I don't like how this one has, you know, a recent high in it already. I didn't do a recap yesterday just because I didn't really trade. I can pull up my stats for yesterday, but I like did barely any trading. I only finished up $50. I think I traded the OMPA stock. I think that's what it was. Made like $80 on that, and then I lost on that other ACOM. $30 on ACOM. Finishing up 54. I just didn't really have any good setups yesterday. NKTX wasn't bad, but I wasn't trading midday. Here's my stats on the day. This was for yesterday, so 52 after commissions or reg fees. Did barely any trading. Kind of low size. Largest win 55, largest loss 34. So far we got decent volume, 200,000. So definitely going to be resistance in this area. This looks like an inflection point. Because it looks like when we ripped up, we had some resistance here, pulled back. After we ripped up, now it's acting as support. And it rips, and then it comes back down to it, acts as support again. And then comes back in it again, acts as support, finally breaks down. Now it acts as resistance. And here you go. There's your resistance, fades back lower. So that's definitely going to be a major inflection point if we do get up to that level. So that's 550. So maybe we have room up to 550. I wouldn't want to start a position at 550, but looking to sell if on a breakout or any momentum trades up to 550 would be a good trade. If we do break 550 and it's strong, then the shorts are going to be on the hook, because anyone who's short here, or today is going to be underwater after breaking 550, and then the shorts over here, they're going to be wanting to either cut their loss or cut their trade break even or take small profits if we get up to this area. So if we break 550 strong, it's definitely more likely that we'll see the surge up to 850. I'm not saying it's going to happen. The market doesn't seem that hot to do that. But if we top out here, it's likely at the open, if like right here, that it's likely that we can get just longs who are trapped on this move, who are maybe holding $5, $6, $6.50, to either take a small loss here or sell break even. It's more likely to get that. And then shorts as well at a holding here that may be added here, or maybe added here, maybe wanting to add again here. because they're maybe looking just for that. This just could be a dead cat bounce and we fade right back down. But if we break 550 and we hold, then it's more likely that we're going to continue higher because the shorts will start to be underwater. So this is a major inflection point. Major. And it also doesn't have any news, so that also does not have this going for it. So I wouldn't be too bullish on it yet. Maybe you can catch some quick scalp trades, like some quick price action trades at the open, or maybe a couple cents here and there, but looking for a home run trade, I don't know if this is going to be it. I just don't think we're in that market right now again. I think it seriously, it cooled off. It definitely cooled off since last week. So you got to keep that in mind. If something does start to rip, like and it's up like 300, 400%, then I would start to look to get more aggressive. But until that happens, I have to protect all the profits that I've made the past month and a half. If I can add a little profit here and there on these slower days, that's fine. I just don't want to have a massive red day on days where was no opportunity. That's the worst kick in the nuts. So share size is definitely a big component to your strategy. It's not just share size flat across the board every single day using the same size. It's really much based on the market sentiment. Right now, the sentiment's cold. And the reason we do that is because when the sentiment's cold, the momentum trading, if you're a momentum trader going long, or if you're a momentum trader going long, breakouts, 1 minute pullbacks for continuation, etc., those types of setups, like myself on these small caps, when the market sentiment is cold, your profit factor, your percentage, if you look at your statistics, your profit percentage or your profit factor is smaller on these days. So when it's smaller on these days, it's definitely more likely to be red. You're a little bit more likely to be red because you're not able to capture as much profit. And it only takes a small mistake to go from green to red. And there's not much opportunity to make that back. So that's why we do keep our share. That's why we make our share size variable, so we can kind of adjust our risk profile according to the type of market we perform well in, the type of market we don't perform well in. When the market's hot, then we can see that our profit percentage may be higher. On the winners, they're much bigger, the winners, and there's a lot more opportunity. Back to back to back to back. So if you do make a mistake, it's so much easier to bounce back after a couple trades. So in that case, it's better to increase your share size and put on more risk. Because you're more likely to get green over the long term because of the amount of opportunities there are. And even if you make a mistake, you take a one bad rip, it's okay. You can always make that back in a couple trades because there's always an opportunity again in the next 5 or 10 minutes. It's usually another opportunity in a hot market. But in these cold markets, one mistake in these cold markets, it could take you a week. It could take you a week to 2 weeks to make it back. Like, let's say I have like a blowout day and I lose 500 or 600 bucks today, which is like one of my bigger green days right now. In a market like this, it could take me a week to 2 weeks to make that back if we're getting crap gappers. And that's what I do not want that at all. I want to, like, in the slow markets, if I can just go sideways or just kind of inch into the green over a series of days in the slow market, then then that's a win. But I'm not looking to have huge legs because that's just unrealistic. You're taking on too much risk, and eventually you're going to get caught. Eventually you're going to get caught. There's also, if you looked at that stock that we traded, ACON, yesterday, you could tell it was weak coming after the open. It was a subtle nuance, but you could tell it was weak because every time we kind of dipped down, the bids stayed low, and there's only the ask price that was moving up. So people were buying the dip, but there was no one stepping in to fill up the bid price, to fill the bid higher. So the market makers were just not on the bull side yesterday. And that's definitely a sign that it was weak. The market was weak yesterday. Because you can just tell them by that subtle nuance, like maybe some people are buying that dip as it comes down at the open, but the bid price was not moving up. Bid price was staying the same. As price is moving up, maybe you'd get a small bounce. Maybe you can get a lucky fill, but it was coming right back down and going lower. And the bid price again would not come back up. The really strong stocks is when it dips down. It may flash down, but the bid price along with the ask price follows it right back up. And that's how you know there's a lot of bulls involved, and the market makers are looking, are much more confident to the long side for the momentum trade. So it's another subtle nuance to kind of pay attention to. And the overall volume as well in ACON was actually quite low at the open. That was another sign. We were reviewing this yesterday. It's only a 786,000 shares of volume. And it's still, that's a lot, but at 930, 931, that's not a lot. This needed to be over 1 million for sure, for it to be strong, or to show like that everyone was looking at this. So yeah, that was another red flag. And then also, you can pull up this chart. So remember this chart here. Rip, dip, break of highs, and then a fade. That's exactly what we got on this day here. Rip, dip, break of highs, fade. Literally the same chart. So I spotted that yesterday, and I was like, all right, we could get that same pattern. So I want to be careful because we did break the highs, we didn't hold. So I was like, I don't know. And that's what we got. We got the fade. I was actually stuck small size on this 100 shares in the hold down. I was like, all right, maybe it's gonna false halt. I thought I saw it getting chipped down on the ask, but I ended up getting pinned down and I was stuck 100 shares. So I gave back like $35 or something. But that trade should have never happened. But I don't know what I was thinking. I was like kind of grasping at straws because I didn't see anything moving. And that's what happened. SNTG. Let's see. We're kind of holding highs, which is good. I'm really not going to know if this is strong until I see the price action at the open. Are bulls going to set? Are bulls going to step up for SNTG? That's the big question. I don't know. It has no news. It's a 1 million float, but it has no news. It just made a recent high and sold off all the way back from $8.30 to $2. This could be it. This could be the dead cat bounce. Shorts are taking profits. Longs are getting in off support, and then shorts are either taking profits, or the longs are taking their profits from down here. Longs here are maybe selling for their small loss, and then it might fade back down. It's really hard to tell, but I don't know. I'm definitely slightly towards the bearish side on this. Now, if this was a fresh stock that we haven't seen all year or last year, had a 1 million float and it had a great news catalyst, consolidating near the highs, and the daily chart wasn't too bad. And what I mean by the daily chart is we didn't have a recent high that's already acting as resistance. That was just recently. Then I would be like, holy crap, this could be the one. This could be the one that goes to 5 or 7 or 8, maybe $10 a share. But I don't know. S&TG, just with what it has been doing recently, I don't know. So keep that in mind. Gotta manage your risk. It's always better to err on the side of caution if you're a little confused about the market sentiment. Throughout December is obvious. Throughout December, we were having 1,000% gappers. So, you know, at that point, it's like, it's obvious. You know, we had VVOS, MINM, you know, those stocks went 1,000%. When you see something like that, then it's obvious. The market's hot, and there's no question that you shouldn't, you know, get aggressive when it's the front side moving. But now, we had a long weekend, or whatever. Last weekend we had a long weekend, I think, and then this week we had another weekend. And last week it was decent in the beginning, but we had those stocks that were having I forget what the stocks were, but they're like $3 a share flushes, $2 a share flushes. That's gonna put a lot of weight on momentum. Yeah, I traded ACON. I already reviewed ACON. So yeah, I was just saying, like, it was a similar pattern what we had a couple days ago. You can tell by the price action at the open. It was just the bids were not stepping up, and you know, every time we had a small little pop, the bids wouldn't fill in, and it would just come down lower. So that was a major sign. Also, kind of a little bit lighter volume for a main stock at the open as well. Usually the main stocks at the open, we have 1 million, 2 million, 3 million shares traded. This one was only 700, 600,000. And there was also rumors of an offering. So also is going to put weight on the momentum. Made 480 on SPEC. Let's see. Oh, probably here. Yeah, 4:30 in the morning. Yeah, if you could trade that. Unless it was this move here, but I didn't trade any of this. No, I did trade this. I traded this. I traded the pullback. I think I made like 80 something bucks on this pullback. Then I got chopped up. Yeah. It wasn't terrible. I mean, it was enough to get green, but wasn't A+ by any means. S&TG fading back lower. Let's see what the overall market's doing. Yeah, we're gonna be breaking highs soon. Looks like it. Looks like we're gonna be breaking highs soon. I don't know. I was reading up on a theory of we're gonna get the reverse market crash, which means that instead of market going lower, it's just gonna go parabolic due to inflation. Even though the inflation has gone lower, that's only core inflation. And there's a lot of tricks that they do to replace the items so it replace the items with cheaper alternatives to show a lower inflation rate. So we don't even know what the real inflation rate is. It's likely much higher than what we've been seeing on the news and through, just the statistics that they're showing. And they're going to lower rates. When they lower rates, more money is going to come into the economy. It's going to get more expensive. Stock market's going to go higher. And just through, like, if you look at history, every currency has been devalued eventually to closer and closer and closer to zero. So that's what's going to happen with the U.S. dollar eventually, over time. Slowly over time. So as the U.S. dollar gets weaker and weaker, it may show that it's strong. Like if you look at DXY, the dollar index, it still says it's strong, but that's only in relation to the other currencies that are being devalued even faster than the US dollar. So the dollar index is only strong relative to the other currencies, but it's still being devalued. And it's probably being devalued at a faster pace than we've seen in the last 100, 200 years. So I think the stock market is going to go more and more parabolic just because of the value of the dollar increasing, the value of the dollar decreasing over time, more exponentially, which causes asset prices to go up. But inflation, I think I was like reading a article as well. Inflation adjusted returns were like down here. It was like 500% or something in the last 100 years. 500% return on inflation adjusted returns. Without inflation adjusted returns, it was like 5,000. Yeah, it's crazy. It's crazy. Man, I don't know. I can't get aggressive today. I can't get aggressive out of the gates, at least. Maybe I trade 500 shares. All right, thanks for tuning in for the pre-market pump. Hit that like button on the way out. Hit that subscribe button if you're a new viewer. Let's go over the disclaimer real quick. All information is for entertainment and educational purposes only. I'm not a licensed professional, and this is not legitimate tax, legal, or investment advice. All information provided has no authority over your decisions. You're responsible for doing your own research before buying or selling. Day trading is risky. Most people lose money. My results are not typical, and there's no guarantee you will have similar results. Be wary of scammers and impersonators. I will never ask for money or personal information. There have been reported fake Triad trading Discord accounts and other accounts trying to scam people out of money. So be careful with that. Thanks for tuning in for the pre-market pump. SNTG at the open is going to be the main watch. I'm gonna keep it easy. Take it easy. I'm not gonna be pushing size until I see something obvious that's strong. And until then, I'm just gonna be working on just getting green and getting going. So hopefully you guys get green today. I'll see you guys on the flip side. All right, peace.